All right. Well, thank you so much, Raleigh and Jeanette. And to answer Jeanette's question, I think we've known each other since the summer of '69. I think it was somewhere around that time.
That is hilarious, and why didn't I think of it?
I know Raleigh had me fired up with the tunes this morning. So
that's all right. That's how we do it over here. Have a little fun.
Anyway, thanks to Jeanette, Raleigh, the whole team at Westmark and TradeThirsty. I really appreciate the invite. It's been a great event. I was able to tune in yesterday, and really some great information that was shared yesterday, as well as forthcoming today and tomorrow. And Scott is also a good friend. I had the opportunity to play golf with him in Chicago and play with him and his family. So great individual there and great trader, great information. So let's just do a quick test here. I want to make sure that I can see your questions, and type a 3 in the chat if you can hear me and see my screen. Nobody likes to be talking to black empty space there. All right, so I think we're good to go here. My questions are really large text, so I think we're going to be good. Feel free to ask all the questions you have. I'll do my honest best to get to everything, just depending on time. But again, I'm going to introduce myself. My name is Silas Peters. You are here to see mechanical done-for-you strategy, any market, any time frame. Truly one of my favorite topics. In fact, I only have about 2 or 3 or enough I can count on my hand, because I don't need dozens and dozens of strategies. This is really literally my bread and butter strategy. As Jeanette said, I've been using it for years. One of the first things I learned, and I'm really excited to share this with you, something actionable that you can take away today. So welcome. You are in the right place. Let's get started here. Let's always start with the risk disclaimer as required from our friends from the regulatory governing bodies, as well as our attorneys. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading. Only risk capital should be used to trade. You can lose money in trading. So while you are reading that and becoming familiar with that, the key points here: don't trade with your rent money, your mortgage money, your milk money, your child's educational funds. You can lose money in trading. Where's everybody from? I like to see who I'm talking to. I am in LA or Lower Alabama, here on the Gulf Coast in South Alabama. Where's everybody tuning in from the world? I know we've got a large group, diverse group here. So we've got people from Minnesota, Ontario, Arkansas, Georgia. What is this? The SEC over here? UK, Washington State, Arizona, Paris. Welcome, UK. There's some internationals. Dallas, Texas, Tampa, India. Welcome. All right. People from literally all over the globe here. So let's go ahead and get started. I want to be respectful of your time. Let's go ahead and kick this thing off. So I'm going to introduce myself once again. This is me with my family trying to tame the Corona conundrum that we're in, just trying to get out and enjoy life the best we can. This is me standing for my alma mater at the University of Alabama with my 2 daughters. See, my 2 daughters have been quite creative here, aside from the homeschooling, making their own masks. And then we live right near the bay, so it's us getting on the bay when we can in the afternoons or on the weekends, just trying to get a breath of fresh air. So my name is Silas Peters. And my journey as a trader started when I graduated from the University of Alabama in Tuscaloosa. So 3 days after I graduated, I sold my car, packed up my small belongings, and I headed north. I headed straight north and drove to the great city of Chicago, the old Windy City. And it's here where I cut my teeth in the commodity markets, and it's here where I was bitten by the trading bug and really never looked back. So while there, I helped run a global trading desk, placing and managing books of trades across the Americas, Asian, and European sessions, primarily working with large block order flow for hedge funds, banks, CTAs, large four spec traders, and the like. I've also been a part of building and managing several futures and equity brokerage firms, building them up, managing the operations, trading, back office sales, and support. Also worked as a private family office investment consultant. I hold or have held these various futures and securities licenses. And then in 2016, I launched Seasonal Swing Trader. But it wasn't always easy. In fact, there was a learning curve, several obstacles and hurdles on the path to where I am today. The first step was obviously learning. School does not teach real life experience in the markets. In the beginning, I made money. In fact, I made a substantial amount of money. Was I lucky? I don't like to think that I was, but ignorance and greed cost me my profits, and I blew up an account. In fact, I blew up a few other accounts in what I like to call revenge trading. I'm sure a lot of you can attest to that. Finally, went back to my roots. I settled down, worked my process, and found overall consistency. So enough about me. Let's talk about you. Does your trading desk look like this? Does anybody's trading desk look like this? I certainly hope it does not. This is actually not my trading desk. This is a poor joke. I found this image on the internet because I feel like it's the perception of what those on the outside looking in think of what us as traders do. But we're stuck in a basement surrounded by dozens of monitors, seeing lines and quotes, whizzing and banging and this and that. Certainly not the case. It does not need to be the case. All this is bad for your eyes. Now, my desk did look like this in Chicago for obvious reasons, but since then I've pared back to a handful of monitors for the obvious day-to-day quotes, charts, trading platforms, and the internet for operational purposes. But the point is, you don't need this. All this does is lead us to paralysis analysis. So who here is a victim or has been a victim of paralysis analysis? I'm raising my digital arm. I have been a victim, been there, done that, got the t-shirt. Per Wikipedia, it's a state of overanalyzing or overthinking a situation so that a decision or action is never taken, in effect paralyzing the outcome. So who has done all the analysis they think they can possibly do? They're checking their quotes or their charts, their indicators, multiple time frames. They go to execute the trade, then whoops, all of a sudden something pops up which contradicts what we were initially about to do. So yeah, of course, a lot of people have been there, done that, and we are going to try to eliminate that in today's session. So what do you trade? I love the feedback so far. I also like to know who I'm talking to, or what do you trade? Tell me what you trade. You trade stocks, options, futures, Forex, maybe even cryptocurrency. I trade all of the above with the exception of crypto. So I do trade stocks, options, futures, Forex on an active basis. Do not actively trade cryptocurrency. I do have accounts across the internet. Don't even know how to get into half the damn things. I view it more as a lottery ticket at best. Hopefully pay for a child's education one day. But I do actively trade all these other markets. So we've got a lot of stocks and options traders. Really pretty much got everything covered here. Don't see crypto yet. A lot of futures, Forex only, stocks and futures, day trade, weekly options. So cool. So we've got a pretty healthy mix there of folks, and that's great because what I'm going to share with you today works in all those markets. It's highly accurate, it's profitable, works in all time frames, and it's 99% mechanical. But most importantly, it's simple. Again, we're not here to teach rocket surgery today. We're going to keep things simple. So my agenda and promise to you today is we're going to learn a simple mechanical setup that is repeatable regardless of the market or time frame. So at some point during the presentation, I'm going to stop and ask, have I fulfilled my promise to you? And I hope to see a lot of yeses. So speaking of promises, let's talk about promises. Full disclaimer, I'm not going to promise you anything in life or in trading, but these were trades that we talked about in multiple free presentations for weeks and weeks and weeks, if not months, in free presentations such as this one. You can see here we have a chart on crude oil and RBOB unleaded gas. We also had a very similar trade in nat gas that you don't see on the chart. We talked about a very specific setup that you're going to learn here in a few moments that went on to realize their $10,000 trade objective and then some. We also talked about these sleeper markets here in coffee and OJ. You can see here from a 5, 15, and 30-year historical price perspective that the markets tended to bottom out or get quiet at this particular time of the year. Does that mean that we went and immediately bought these markets, that we went and got long coffee, long OJ? Absolutely not. Of course not. We said be patient, wait for a very specific pattern to set up, one that you're about to learn here momentarily, and they went on and met their $5,000, $6,000, $7,000 per contract price objective. We also talked about markets in corn, beans, and wheat. You see here from a 5, 15, and 30-year historical price perspective, they tended to get quiet or bottom out at this time of the year. That's exactly what they were doing. The markets were being lulled to sleep by market participants due to favorable weather out in the Midwest. We said, wait for the pattern to show up. And that's exactly what they did. And they went on to explode to their $6,000, $7,000, and $8,000 per contract price objective. So who here is ready to see the setup responsible for these very recent trades? I'm talking about very recent trades that have just triggered. Who here is ready to see those? All right, of course you are. You probably wouldn't be tuned in today. So let's go ahead and get started. We're talking about trades here in the S&P worth 750 to 800 points. Cocoa here worth 160 points. The Aussie Kiwi for 300 pips, and 2 trades in Facebook worth about $20 a piece. So drum roll please, it is the 1, 2, 3 pattern, also referred to as the 1, 2, 3 top or 1, 2, 3 bottom. So who here is familiar with the 1, 2, 3 pattern? I would suspect that 99.8% of you are. I didn't invent it, but this is technical analysis 101, folks. But one of the most fundamental technical patterns in the textbooks, but highly, and I mean highly, overlooked by most traders. So I'm seeing pretty much yeses. I've seen a good chunk of no's, which is pretty cool, but a lot of yeses. I'm even getting some feedback here, people that are actually using it. Great pattern. Absolutely, Gary. So let's get into the nuts and bolts of this pattern. Let's talk about the basic principles here. The setup is price action based. The pattern is comprised of a low and then a higher high and then a higher low and a break of that higher high in the instance that we're going long. The same rules apply, but inverse if short. It anticipates a change in trend from up to down on a break below the 2 or B point, anticipates a change in trend from down to up on a break above the 2 or B point. The strategy, it usually occurs at the end of trends and swings, can be an indication of a change in trend, can also be found within a trading range. So you may argue that, isn't this a counter trend strategy or a reversal type strategy? And in essence it is, but we're going to talk about ways to filter out this pattern or strategy to even further put the odds in your favor. I will stress it works extremely well when the pattern sets up at important or significant areas of support and resistance. Also, other high probability technical patterns such as head and shoulders, tops and bottoms, double tops, double bottoms, and so forth. Let's look at the basic mechanics. So don't get carried away about what asset class this is or time frame. It could be Caterpillar, it could be the Canadian dollar, it could be Litecoin. It doesn't really matter. We're learning the very basic mechanics here. So over here on this chart, point 1 is when we have the highest peak, finds resistance, and then moves down. That is our established number 1 point. You see that the market moves down, finds short-term support, and retraces higher. That gives us our established number 2. The market trades up. Once we stop making these lower highs and pull down, we get an established number 3. So we have a 1, 2, 3. The market could have traded up here, could have traded up here, could have even gone up here as long as we don't take out the number 1 high. We have a valid setup. So here we have a 1, 2, 3, and we know we're looking to get short on breaks or closes below the number 2. Let's look at the 1, 2, 3 bottom. As you would suspect, same rules apply, but only in inverse. So here we have point 1, which is the lowest point where we found support. Market trades higher, pulls back, giving us established number 2. Market trades lower. As long as we do not take out the number 1 low, we have a valid number 3. So here we have a 1, 2, 3. We know we're looking to get long on breaks or closes above the number 2. Now, we don't get that here in this particular example, but we know off immediately that's where we would be looking to get long. Let's look at some chart examples. We'll start it here with the 1, 2, 3 top pattern. And we're going to look at a chart. So this is a daily chart of the Aussie dollar or 6A. If you don't trade futures, you can trade the ETF, which is FXA, that tracks the Aussie. If you don't trade futures or stocks, you could look at the Forex pair, the Aussie US. You're going to see the exact same pattern and setup. So in the next few examples here, we're going to look at daily charts. We don't always have to look at daily charts or 52-week highs or 52-week lows. Those are going to give you your highest probability setups because we all know that the higher time frame governs the lower, and those are going to give you your best odds. But in the next few examples, we're looking for 52-week highs and 52-week lows, but we'll talk about ways later that you can dial that in, maybe every 6 months, every 90 days, depending on how frequent you want to see the setups. So with that aside, let's look at this chart. we have a number one point here as indicated by the red one circle. Why? Because it's a 52-week high. Market trades lower. Once we stop making these lows and pull up, we get an established number two. Now the market only retraces higher by about 4 or 5 bars here and then pulls back, giving us a 1, 2, 3. Again, we could have come up here, could have come up here, could have even come up here as long as we don't take out the number one high. Here we have a 1, 2, 3. We know that we're looking to get short on breaks or closes below the number 3, which is exactly what we get. So you say, that's great, Silas. I already know this setup, but what about the other important areas or parts of the recipe? Where do I put my risk? Where am I putting my targets? Where am I taking profits? All that. Very good questions. Very important stuff to know. So here we have our 1, 2, 3. Our initial risk must always be above the high of the number 1. Okay. Our target is the distance between the 1 and the 2. So we measure from the high of the 1 to the low of the 2, and then we measure downward. So it's about 225 ticks or $2,200 per contract in this example. Okay. Now, so immediately you'll realize it is a 1-to-1 risk reward ratio. But we're going to talk about ways later where you can pretty much adjust your risk depending on your flavor or style of trading. So what is the next logical area of resistance? Or excuse me, logical area of risk management at the next area of resistance? It's very important to give the market time to materialize and start to move in its expected direction. So here we start breaking down. Our stops can now be cut by almost 50, 60, or 70% here, and we trail our stop at next area of resistance. So let's look at another top example. 1, 2, 3 top example, daily chart of Walmart. WMT, number one point here, it's a 52-week high. 1, 2, 3. We know we're looking to get short on breaks below the number 2. So we already know what 99% of us traders struggle with. Well, where do I get in? Where do I get out? Where am I putting my stop? Where am I taking profits? We already know that days in advance. We have the 1, 2, 3 setup. We know we're looking to get short on breaks or closes below the number 2. We know our initial risk is above the high of the 1. And we know our target is the distance between the high of the 1 and the low of the 2, measured down, or about $5 or $5 in this particular example. So let's look at the 1, 2, 3 bottom example. This is a 15-minute chart of the E-mini S&P. Now, when we're looking at an intraday chart, we're obviously not going to be looking for 52-week highs or 52-week lows. It doesn't make much sense. So on an intraday chart, we're looking for session lows or session highs. And if you're not familiar with futures and Forex, they trade darn near around the clock. 23/6, opening at 5 p.m. Central on Sunday afternoons in the Globex session, trading into the Asian session, into European session, into the New York session, closing down for about an hour in the afternoon, reopen, rinse, and repeat through Friday. So when we're looking at an intraday chart, whether it's a tick, 5-minute, 15-minute, or so on, we're looking for new highs or lows for that session. So wherever you start your trading day, I start mine around 6 a.m. Central. I'm only looking for new highs or lows of that session. So if you're starting your trading day around the 9:30 Eastern cash open, the lunch session, maybe even the last hour of the day, you're only looking for new highs or new lows. So here on a 15-minute chart, we have a new session low as indicated by the 1 red. We have a 1, 2, 3. Aggressive traders might take the initial long here on this breakout above the number 2. So maybe you're working a tick or 2 buy stop, triggering you into the trade. A couple of alternative entry methods that I prefer is to either A, wait for the retest, or B, wait for the market to come back and hook back up and through the number 2. So using that entry method is going to do one of two things. One, you're going to miss some trades. Sometimes we'll pop up and we'll zip up to take to the profit level and leave you in the dust. Don't worry about it. There's plenty of other markets, plenty of other time frames you can look at. Don't worry about it. But what is it also going to do? It's going to help you keep you out of potential false trades, potential false breakouts. So sometimes we'll pop up and the market will roll over and you'll get stopped out. So here with this method, we pop up, market comes down, you get that extra additional confirmation back up, that hook back up and through, that carries on to profit objective. Well, let's look at a 1, 2, 3 bottom on a weekly chart. Hell of a way to catch some longer term position type moves here on the weekly chart. Here we have a multi-week low. What do we also have? A double bottom, high probability pattern, 1, 2, 3, double bottom. We get a bullish breakout here in this bullish candle, break above the number 2, trade sideways for a few weeks, come back down or retest and or hook back above. That's our confirmation to enter Apple to the long side. How do we do it? We buy Apple stock, we buy call options, call spreads, solid money put spreads, whatever your flavor or style of trading may be. Now, don't throw banana peels or tomatoes at me. They don't all work. There's no holy grail in trading or life. We're all big boys and girls. You already know that. This is an example of a failed trade here. 5-minute trade of the E-mini S&P. Hell, I probably took this on my live account. Market's trading and getting quite vertical, quite steep. We have a number 1 point. 1, 2, 3. We have a trend line break. The setup looks good. You're either getting short on the initial breakout below the number 2, or if you wait for the alternative method, market comes back up, hooks back down, you're getting short here. Ends up being profitable by maybe 1 or 2 points. I'm not sure the exact total there. If you exercise any type of money management, you're stopped out here at the next area of resistance above the number 3, or if you sat on your hands and didn't do anything, you're stopped out at the initial risk level above the number 1. But we'll look what happened here. Notice this example. We have a new number 1 point here. Why? This high is higher than this high. New 1, 2, 3. Market breaks down, gives a retest, ends up being a profitable trade. Now, I do like to also show what this no trigger trade or no trigger pattern looks like. And I'm going to tell you in a second why I like it when this happens. So here we have a 1, 2, 3. We know we're looking to get long on breaks above the number 2. But what happens? The market sells off, takes out the number 1 low. No harm, no foul. We start to count over. Here we have a new 1 point, 1, 2, 3, looking to get long on breaks above the number 2. What happens? Market breaks down below the number 1, start to count over. 1, 2, 3. Market finally breaks above the number 2 here, and we're triggered into the trade. So let me tell you why I like this. Why do I like this? It's because something is likely happening in the pattern. I'll give somebody a gold star here if they can answer this. What is likely happening? What is likely happening on this particular example? So we have divergence. We have divergence. So the price action is making new lows, new lows, new lows, new lows. What is likely happening though? So we're having higher lows on whatever your favorite momentum oscillator may be, whether it's RSI, stochastics, MACD. We're likely making higher lows, or i.e. no lower lows on that oscillator. So price action low, 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 high, high, high. That's what we call divergence, and that's one of those things that we talk about that helps put the odds even further in our favor. Let's talk about the 1, 2, 3 pattern trade management. Again, the confirmation of entries on a break above the 2 or B point for a long, or a break below the 2 or B point for a short. Exit strategies. If you only have the ability to trade one contract, whether one futures contract, one Forex contract, one option contract, or one share of stock, I would say go for the distance between the 1 and 2 point as your initial targets. It's uncanny how more often than not, they'll go tag that to a T and often serve as a reversal area. Now, when you have the flexibility to scale out of contracts, that's an area where you want to take maybe a third off, 2/3, half your position, however you manage your trades at that area. And then you can trail your stop or your entry however you trade. It's ultimately up to the individual. They come a dime a dozen. I like to use Fibonacci numbers, good old-fashioned support and resistance. But there's trend line analysis, 2 to 3 bar candles, moving averages, PAR-SAR. Really have to figure out what works best for you. All right, so I've already shared with you that this setup works on any market, whether you trade pips and Forex, Pepsi stock, pot, either potash or pot stocks, pork bellies, or the Polish zloty. Also showed you that it works on any time frame, whether you trade a tick, 15, hourly, 4-hour, daily, and more, and on any trading style, whether you're a position trader, swing trader, scalper, or day trader. You have to figure out what works best for you. So I'm going to take a swig of water here. Do me a favor, type in the chat, what is everybody's trading style? What is everybody's trading style? All right. I had trouble there finding the box once again. So a lot of swing traders got to really, all over the board, swing and day, position, surprisingly, a bunch of scalpers in here. Scalper and tick trading, probably some of the toughest. But the point is, and I appreciate the feedback. The point is that you have to determine what your bread and butter is. Mine, I found that the 5-minute on the S&P, NASDAQ, crude futures, currency futures work best for me. I also found that the hourly and 4-hour work really well on the currency futures, even some of the commodities, Forex, and then, of course, daily to swing trade all markets, stocks, options, futures. That's where I got started in my trading journey long before we were all sitting in cubicles looking at our smartphones that just didn't exist. I would look at end-of-day charts in the evening, early in the morning, do my analysis, place my trade, then off to the workplace. I had no idea what was going on. I'd come back home and see what happened. And it was honestly probably the best thing that could have happened to me, and probably for a lot of you as well. So you've seen the proof. Let's look at some real trade examples. Not to say that the past chart examples were fake examples, but let's look at some real trade examples that we've utilized in some of our services. So the first chart here is crude oil. You guys and gals can read all this text on the right. I'm going to be working on the chart from left to right. So everybody is pretty familiar with crude. Everybody, it's probably the most watched and traded market in the world, whether you trade crude futures, crude ETFs, energy stocks, or crude CFDs. Excuse me. Everybody likes to talk and follow crude, especially with what's happened over the last month or so in the volatility. It's been absolutely nuts. So here we have a daily chart of crude. We have a number 1 point here on the left. Why? It's a 52-week high. Here we have a 1, 2, 3. It's a smaller 1, 2, 3 nonetheless, but it is still valid. We know immediately where our entry is, where our stop is, and where our targets are. So here we have a 1, 2, 3 top. We know we're looking at short on breaks below the number 2, breaks or closes below the number 2, and that's where we enter. We know our initial risk is above the high of the 1, and our target is the distance between the high of the 1 and the low of the 2 measured down, or $3 or $3,000 per contract. It quickly met that in short order. Next, we go into kind of this range-bound consolidation mode. And I've got called out for, well, did you miss this trade? Well, maybe I did, maybe I didn't. I'm not trading the range-bound 1, 2, 3s, but you certainly can. If that's your forte, by all means, help yourself. This is a nice 1, 2, 3 inside a range. 1, 2, 3, market breaks above, and it ends up meeting profit objective. But I'm only looking for new highs or new lows, and we get just that. Here we get a new number 1 point because this high is greater than that high, so we get a new count. 1, 2, 3. Market breaks down below the number 2. You get 4 or 5 days of retest. And let me tell you why I got excited when I saw this. Well, one, I got excited because we already know that the 1, 2, 3 top is a high probability pattern. Secondly, we are at a time of the year from a seasonal perspective where crude and energy markets typically tend to top out and trade to the downside. So that really had us foaming at the mouth to take this trade. Here, we got a 1, 2, 3 trend line break, get a few days of retest, and we got short. How? We shorted crude futures. We bought put options. We sold call spreads, traded USO and other leveraged ETFs, quickly met our $4 price objective, and then traded down. This trade actually traded down another $20,000 per contract. We didn't catch the entire move, but we damn sure caught a large chunk of it. And all we did is trail our stops until we either got stopped out or we had a potential reversal. Here we have a potential 1, 2, 3. Here we have a potential 1, 2, 3 bottom. Here again, got really excited. Why? Because of the high probability 1, 2, 3 bottom pattern. We also probably have my second favorite pattern, which is a triangle, beautiful triangle pattern here. And third, we're now at a time of the year where crude and energy markets typically trade to the upside. In fact, this is one of the best seasonal trades I have in my back pocket. So we were geared up, ready to get long. But what happened? Market breaks out to the downside, to the bottom of the triangle, takes out the number 1 low, ultimately flushes down another $10,000 per contract, or $10 a barrel. We finally get this one flush down here, finally make a bottom, 1, 2, 3, and we get a long trade that meets its $5 price objective and then some. So I want you to remember this chart and the subsequent charts because we're going to come back to them. I have something really special to show you. Let's look at gold. Here's another market that everybody loves to talk about. Everybody subscribes to these expensive newsletters and overseas newsletters. Gold's going to go here. Gold's going to go there. Who cares? Look at the chart. Let the price action help dictate to where it's likely headed. Here we have a daily chart of gold. This is actually GLD that tracks gold futures. I like to look at the futures market first because it's going to be a lot cleaner, a lot more fluid because it's trading around the clock. You're not going to see all these gaps. But regardless, you want to start with the ETF, that's perfectly fine. Here we have 3 setups. 1, 2, 3 top. Market breaks down below the number 2, gives you a couple of retests, meets its $4 profit objective. Here we flip to the long side. Now we have a 1, 2, 3 bottom, also have a double bottom. Market breaks above the number 2, gives you a retest, reaches $2 profit objective. Now, what about this? Very similar to that crude example. What about this nice trade here in the range? Remember, I'm looking for new highs or new lows, but doesn't mean you can't capitalize on potential 1, 2, 3s inside the range. So here we have a 1, 2, 3 top, beautiful trade to the downside. But remember, I'm only looking for new lows or new highs. Market trades to the downside. We start making new lows. These are new number 1 points. These lows are lower than these lows. So we have a potential 1, 2, 1, 2, 3. Here we have a potential 1, 2, 3. Market gaps down, takes out the number 1 low. Don't worry, we get a new count. 1, 2, 3. Market gaps higher 2 days in a row. Can guarantee you to see that on the futures chart. But anyway, gap, comes back down, gives you a trend line retest. That's our confirmation to get long gold. How? By GLD, buy gold futures, buy call options, sell out of money put options, however you like to trade. Let's look at Delta Airlines. This is probably becoming redundant by now, but I'm just trying to hit home the fact about how simple these are to spot. Here we have a 1, 2, 3 bottom, $4 move up. Here we have a 1, 2, 3 top. Market gaps down below the number 2 breakout area. I don't really chase the gaps. I prefer to see the test or the hook back down. But we've got students and members that will trade all these setups, so they're aggressively selling or buying puts here. Here we get another chance to trade a 1, 2, 3 top, 1, 2, 3. Market trades aggressively below the number 2. Get a small retest there, trades down another $8. And then here we have a 1, 2, 3 bottom, trades higher, pulls back, and then goes up to make an $8 plus move. All right, so you Forex traders, this is a 4-hour chart of the CAD Swissy, the CAD versus the Swiss franc. Here we have a multi-session low, 1, 2, 3, also have a double bottom. Again, the aggressive traders are getting long here on the initial breakout. Those alternative entry players are either getting long on the retest or the hook back up above, quickly reaches its 70 pip profit objective. And now we're looking for new highs. 1, 2, nope, 1, 2, nope, 1, 2, nope, 1, 2, nope, 1, 2. All right, we finally get a 1, 2, 3 top here. It's a smaller 1, 2, 3 top, breaks down below, gives you a retest, meets its 40 pip profit objective. I get asked all the time, does it work on intraday charts? The answer is, of course, yes. It's a 5-minute chart of the NASDAQ. Mini NASDAQ, 1, 2, 3. Market breaks above the number 2, hooks back above or long, meets its 13-point profit objective. Here we have a 1, 2, 3. Market breaks down below the number 2, trades sideways, gives us a little heartburn for a second. Ultimately breaks down here in the probably last hour of the session, flushes down, excuse me, giving us a new number 1 low, 1, 2, 3. Market breaks above the number 2. If you're lucky enough to get long there on the retest, you're filled on your 30-point profit objective in about 2 bars. So why are you here? You're here to learn my mechanical done-for-you strategy for all markets and all time frames. Have I shown you enough proof? This is the point of the presentation where I'm going to ask you, have I fulfilled my promise up to this point? I'm going to take another swig of water here. Have I fulfilled my promise up to this point? And I'll kick you out if you say no. I'm just kidding. If you say no, I honestly want to know why, because I don't know how I can break it down any easier, but I would love to know why. All right. Awesome. So good feedback so far. I got a 2 mechanical. Well, that was the I guess I did my job. It's 2 mechanical. So, but wait. But wait, you know what's coming. There's more. Usually when somebody says that, it doesn't end well for that person that says it. In the South, they say, hold my beer and watch this, but I can assure you that it's going to end nicely. What if the strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and the target were drawn for you? And what if your platform could scan the markets for you and tell you when there is a pending setup? I don't know about you, but I would find that to be quite amazing. So do you remember the examples I just shared with you? I hope you do. It's just a couple minutes ago. Remember I said, remember these charts? Well, let's look at them. This is the same chart we just looked at on crude oil. Same chart we just looked at on crude oil. So let's talk about what all this means. You're smart boys and girls. You probably already figured it out, but let's talk about what these colorful arrows and lines are. So let's look at this example here in the middle. The green arrow is your number 1. The red arrow is your number 2. The blue arrow is your number 3. 1, 2, 3. Now, what is this white chevron or this stealth signal? That is a visual aid telling us that, hey, we have broken or penetrated the number 2 area. Or down here, we've broken or penetrated the number 2. It's not a buy signal, not a sell signal. It's just a visual aid waving to you saying, hey, we have a potential setup. So if and only if we break these number 2 areas, we're going to get the chevron print. And if and only if that happens, we're going to get these 4 lines print. So what are these 4 lines? The blue line here is your breakout level, could be considered an entry level. Your red line is your risk level or your stop. This lime green line is TP1 or take profit 1 or profit objective 1. And the dark green line is TP2 or profit objective 2. So remember, TP1 is just the distance between the high of the 1 measured to the low of the 2 measured down. And TP2 is simply 2 times the distance of TP1. Here's the gold example. Here's the long setup here. Here's that range bound setup. Did not catch this because we're looking for new highs or new lows. And here we have new lows being made. Here's that 1, 2, 3. You can clearly see we're hunting for a bottom. And the market just peaks its head above the number 2, giving us our print. Comes back, retests, and then we can see we're looking for a new long over here. I mean, a new short. Let me go back to that crude example. What are these green arrows? Why are we seeing all these green arrows? Because these are new lows, new lows, new lows, new lows, new lows. Once we stop making new lows, pull up, we stop making the new low print. So we have that potential 1, 2, 3. Market trades lower before we break out above the number 2. So hence no chevron, hence no lines. Here we have a 1, 2, 3 bottom. Looking to get long here. Market breaks down, so we get no prints. All right. So we've covered gold. Here's the same chart on Delta. There's a long trade. There's a short trade. There's a short trade. There's a long trade. And the NASDAQ chart. Here's the 5-minute NASDAQ chart. Session high, 1, 2, 3. Market breaks down below the number 2, hugs the breakout level, hits TP1, hits TP2 to the tick. TP2 actually happened to be a new session low, so we get a new number 1 print. 1, 2, 3. Market breaks above the number 2, hooks back above, hits TP1. Doesn't quite hit TP2, but it's close enough for government work. Should not have lost money on the trade. So I asked, does it work on range-bound markets? Well, theoretically, it should, right? Because we're only looking for new highs or new lows. So here we get that new session low. This low is lower than that low. 1, 2, 3. Market just peaks its head above the number 2, giving us our print. Market hooks back above. We're long. Hits TP1. As we're looking for TP2, we're also making new session highs. So that gives us an idea that we may need to get ready and reverse our trade. Here we have a 1, 2, 3. Here we finally meet TP2, finally get a 1, 2, 3 top here in the latter part of the session, breaks down below the number 2, hooks back down, TP1, TP2, and then we're looking for a new potential long setup there towards the end. So is this training for you? You and you only can answer that. If you're new to the markets and want to jumpstart your success. If you're an experienced trader and want to add another arrow to your trading quiver. If you're tired of all the noise that we talked about, the paralysis analysis, the indicator overload. If you simply want to simplify your process or just add another strategy to your toolbox, or if you need a very specific step-by-step mechanical plan, this could be something for you. You can do it very part-time, I can assure you that. So a real quick story that I like to share is when I had this thing built out, I brought my wife down to my office who teaches ballet, and I brought my 2 girls down who were like 4 and 5 at the time. Trust me, they don't know a flying flip about the markets. They don't even know what I do. And I showed them what I was attempting to accomplish here. And so after they got done being excited about the colors and the candles and this and that, I said, calm down, take a look at what I'm trying to do, look at the setup, the strategy. And my point is at the end, they understood, they got it. Like, yes, I understand. So my point to you is that if they can understand it, then you certainly can too. I don't remember learning how to count to 3 or learning my primary colors, but that's about all you need to know with a dash of common sense. So I do have a very special offer for today's attendees. Now, I do limit this to 25 because I'm a human being. I actually do manage my own support. I do have a support staff, but I read every comment, feed, and message that comes into our inbox, and I take care of our customers. We don't throw you out to the wolves, leave you hanging out to dry. So here's a special offer. It's called the 3S Code High-Low Indicator Scanner. We've had this built for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. Also includes a chart pattern principle, PDF manual and trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and access to our new private Discord channel, which we're extremely excited about. So what the heck is the 3S Code High-Low Indicator Scanner? Let me refresh your memory. Here is a daily chart of CRUDE. This is the 3S code indicator on the chart. Here we have the 1, 2, 3. Once we get the break below the number 2, we get our chevron print and the arrow. So here we have in our risk, entries, and profit levels. Here we have a short, and then a long. Here's a daily chart of love. Here we have a short, hits TP1 to the tick. Here we have a short, whoops, bad trade, lost money on that trade. Get another chance to get short up here. And then why do all the work when you can let technology do the work for you? So this is a screenshot of my Thinkorswim platform where I'm scanning for stocks, scanning for 1, 2, 3 tops across the Russell 1000, only stocks that are optionable, and only stocks that are $20 a share or greater. I hit the green scan button, voila, I get my results. This is also a screenshot of my watch list. I have one monitor dedicated to watch list where I scan multiple markets, multiple asset classes and time frames all at the same time. 1, 2, 3 tops and bottoms across all these markets and time frames at the same time. You can do the same. So we've been looking at Thinkorswim. This is what it looks like on TradeStation. Here's the 3S code indicator. Here's the 3S code scanner component. Here's what it looks like on NinjaTrader 8. Here's the indicator component and the scanner component. Here's what it looks like on TradingView. I love TradingView. This is a 4-hour chart of Apple. Here's the indicator component. Full disclaimer, there is no scanning component on TradingView or MT4. Here's what it looks like on MT4. Here's your indicator component, 4-hour chart of the Euro Kiwi. Here's a long, there's a short, and then a long. So with the package, you're getting the indicator for all platforms, but there's a scanning component only for TOS, TS, and NT8. Now, if you know a Russian programmer, please introduce them to me, and we'll have this built out for scanning components on MT4 and TV. But right now, as far as I know, it does not exist. So we know there's no real crystal ball in the market, but I like to view this as one that provides me with a daily process. I'm letting the platforms and technology scan the markets for me, locate the setups, navigate towards my entry into my platform, and then I manage the trade through the exit. And you can start doing so today with what we call the 3S code. So here is the special offer for the first 25 spots. 3S code, high-low indicator scanner for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. Also going to get a chart pattern principle PDF manual and trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and access to our private Discord channel. Now, we've recently offered this on the internet at these prices. No joke, $19.97, $14.97, and $9.97. But because of this special live webinar event, first annual EMC Summit, we're pleased to offer this for a one-time fee of $397. The offer link is seasonalswingtrader.com/code, and hopefully one of the moderators can plug that into the chat box for you. seasonalswingtrader.com/code. It's a one-time fee. So let's talk about what the indicator scanner includes. You're going to get a visual plot of the 1, 2, 3 top and bottom reversal areas. Entry, exit, stop, target levels, all color-coded for easy reference. Everything is pretty much customizable. So if you want to change the look-back periods, to find more trade ideas or less trade ideas, that's up to you. If you want to look for setups only or trigger only or both, you have the ability to do that too. What does that mean? Setups only, meaning those that are in the process of setting up have not triggered, and trigger only is pretty self-explanatory, meaning those that have already triggered, traded above the 2 or below the 2. You can scan for tops, bottoms, or both at the same time, as well as scan for intraday setups or swing setups all at the same time. If you don't like the red arrow, you want hot magenta, you don't want lime green, you want puke green, you can change all that, arrows to dots, so on and so forth. Let's talk about bonus 1, 90-plus page PDF manual. It's yours to keep. You download it. You can print it out. You can use it for firewood, whatever you want to use. It's going to cover identifying other strategies, trend markets, range markets, seasonal ideas, commitment of traders, order types, and more. Bonus 2, 25 top option strategy guide, literally strategies for all account sizes. If you're just learning to trade basic calls and puts, to more intermediate advanced, such as condors, verticals, butterflies, diagonals, and more. And then bonus 3, access to our private Discord channel. This is a channel we just started a couple of weeks ago. Very excited about it. It's a community where everybody can come into. It's not a trade room. It's a community where people can come in, like-minded people like yourself, where you can post charts, analysis, ideas. Because look, folks, there are thousands of markets, all kinds of different time frames. It's impossible for one human being to try and cover all that. As much as we would like to catch every setup, every trade, it's just not possible. So this is a community where people are posting ideas. If we have time, I'll be happy to show it and talk about markets that we posted yesterday. All right. So here are some unsolicited testimonials. They come in all the time. I don't ask for them. I'm very pleased and humbled. But most importantly, I'm grateful that people are actually taking action. So, and here's one more example of an alert that we sent out with one of our services, all using the 3S code. You see trades here on crude, unleaded gas, pound, euro, nat gas, all using the 3S code indicator. And I do eat what I cook. These are real snapshots of my platforms here in Thinkorswim, where I've got my equity, doing my equity and equity option trading. And then my futures platform, you see I've got crude options, cotton options, copper options, yen options, nat gas options, the S&P, and more. And here's just, again, one last final example. Nice, easy, clean, 2-point setup here. 5-minute chart of the E-mini S&P, and you can do the same. So here's the offer once again, seasonalswingtrader.com/code. One-time fee, $397. You own it for all of these platforms. And so let me get to the questions here. We do have some time here to answer questions. All right, so does studies show better to wait for a close above, below, or 2-point, or just take the break? Ed, I prefer to wait for additional confirmation. I like to see a break and then a retest, or the break and then the hook back. There are certain things that we will look at, and this is all in the members area, different ways, things that you can apply, if you want to call them filters. Pretty darn good right out of the box, but we want to put the odds even more in our favor of an already high probability setup. How did it get the arrows LG? That's part of the indicator. The indicator will plot that automatically for you. Robert, the indicator does not have an auto trade option, but I'm glad you asked about that, because we do have something very, very exciting in the works. And since you brought that up, I'll show you. So this is our Discord channel that we just started here. And you can see, guys, I mean, we have channels here for intraday, swing, stocks, futures, Forex, where members are posting ideas. And this is something that I posted yesterday at 2:40. I posted this 4-hour chart of ZB. I said, look at all the confluence here. 1, 2, 3 top. We had divergence. We knew our profit target was coming right into the 200-day EMA, and the TP1 happened to be at price structure. Our top was also at price structure. Here's what I posted this morning. Look at what happened. Good for about 25 ticks. I don't know where we are right now, but about $700 or $800 per contract, okay? Same thing here on the S&P this morning. Textbook trade on the 5-minute S&P. Posted this trade, textbook trade there. I think that was a 4 or 5-point winner. Also posted a potential 5-minute chart on the pound. Here's what the members area looks like. Once you log in, you'll go to products, select 3S code. Here's where we post our weekly high-low scan updates. Here are all of your bonus materials. So a lot of bonus materials unannounced, but how to customize the indicator, setting up scans, day trading, swing trading. You scroll down here. Here are all of your installation guides and videos. Here is Thinkorswim. Also put in a special seasonality widget indicator for a free widget there for Thinkorswim. Not required or mandatory, but it's helpful. TradeStation, V10, V95, NinjaTrader 8. These are video guides here. TradingView, again, indicator only, and then MT4 indicator only. So you get access to all those platforms. So you asked about an auto trade option. We have not released this yet. You're actually seeing this before our members, but we have built out a backtester and optimizer on NinjaTrader 8 and Thinkorswim, where you as the user, this is not included with this package, but it'll be grandfathered. You'll get a very special launch rate when we are ready to release this. We're still tweaking some things, but we are running backtests here on gold, the euro currency, S&P. The results are amazing, to say the least, okay? And so we're still working on that. And if you have NinjaTrader 8, it also comes with the strategy portion. So you can turn that into an EA or automated solution. All right, let me see here. Not familiar with Blackbird or Bloodhound. I heard of Bloodhound, but not available for either of those. Got a wow from a Florida Gator. All right, not NT7. Yeah, we do provide support for setup. I mean, honestly, if you were able to log into the webinar today, you shouldn't have any problems. But look, I'm not any tech wizard. Don't pretend to be. So we realize that sometimes you run into issues, and we do have a support team that can help set you up. Literally takes probably 5 minutes. And if you absolutely require some additional help, we have a guy that can actually log into your computer via a remote session and help set up for you. There's no need to learn how to calculate the target price of moves, John. It's all built into the indicator. So let's go to this chart right here. You can see that it's plotting the target for you. All right, they're plotting the target for you. And actually on the newer version, I don't know why it's not popping up, we actually have price labels up here now. We have entry, stop, and target levels in the top left of the chart. So you can see, I mean, even in the extreme volatility, that's why we're here, right? I mean, the name of this summit is Extreme Market Conditions. How does it perform in extreme market conditions? To me, the validity of any strategy or setup is, does it survive all conditions? The answer is yes, it certainly does. Look at these huge moves here, daily chart of the S&P, textbook trade here. This is about 800 S&P points, folks, and this is on a daily chart. Now, here it is. Let's go to the 4-hour chart that we just talked about on bonds, and let's see how it's performing. So here is, so it went and met its profit objective. It looks like to a tick. I mean, to me, that's pretty amazing. You can use it to day trade stocks. I don't day trade stocks, but you certainly can. It will work on Mac if you have one of those, I guess, boot camp things, whatever Windows compatible widgets. Yeah, I can look at a couple of symbols for you here. So you want to look at Clorox on a daily. So yeah, so here we have a larger 1, 2, 3. Obviously, these are going to be a little riskier here. A lot of volatility in Clorox because of the situation going on here. So we have a 1, 2, 3. I would probably avoid this one. Wait for a new top. Boeing. Take a look at Boeing. Yeah, so good eye. So yeah, there is absolutely a 1, 2, 3 top in the making here. Be looking to get long above that area. CCL, you guys are looking at the stocks that are on on the news, getting crushed. So there's Carnival, Delta Airlines. So yeah, and we talk about some of the filters and nuances that we use to take some of these trades and which ones we ignore, because we do not trade every single setup. It's just not a prudent thing. I think I'm out of time. Jeanette, Raleigh, first off, thanks everybody. Hope you're staying safe out there in both the health-wise and in the market environment. Happy 6 de Mayo. Thanks for inviting me. Really enjoyed it. Hope my sound came through well. Good luck to everybody, and thanks to all the new members. Take care.